Okay, welcome traders. This is Heart Pumper coming to you from the closingprint.com on 3/23. We're going to go over some sector reviews, kind of the overall market and what I'm seeing. And if we have time, we'll do some Q&A for some individual stocks. Anyway, so basically what I want to go over first is I want to go over the sector review. Obviously, I posted it in the room. I use stock charts if everybody can see that. And basically what I do is I'm doing a summary at the end of the day. I'll just give you guys an overall flow. So I'll change this to the end of the day. Hopefully everybody can see this. Oops, sorry. Let me update this. There we go. That end of day looks like it was from yesterday. They haven't updated yet. So here's the intraday. So this is what I just posted in the room. Obviously, we can see that the money was flowing into defensive sectors today, XLU, XLP, and XLRE, okay? IWM was the biggest loss today. So here's what I did at the open today. I was watching the price action. We'll go through a few charts. We did bounce early in the day, but as I posted in the room multiple times, we're running into supply. We're running to supply. Qs hit that 321 supply just almost perfectly. Amazon and those other ones were holding up, so they weren't selling off as much as the other ones. But what happens is the rest of the sectors, the IWM and SPY and DIA were weak. And unless we have a tailwind, the Qs were not going to be able to lift the whole market today. And granted, I wanted Amazon to go. I wanted all the other tech stocks to go and basically lift the market up. But when you have 3 out of the 4 sectors that are not a tailwind, your longs are just not going to work. And your risk reward for a move higher when all of that is happening is pretty low. So that's why I didn't go long anything. I did see early on that IWM was the weakest. So I jumped on the TZA trade, which paid nice today. So anyway, that's basically what I do after the first 30 minutes of the opening. I'm not I don't like to day trade, but this is kind of a day trade environment. Today was a good setup for that. Then what I'll do is I'll go for a 1 week and we can see what's happened in the past week. Okay, it's pretty glaring for me where the money's flowing. Okay, XLP, XLU, and XLV could be even classified as defensive sector. And you can see what is lost the most. Okay, so this is IWM as I talk and Benny talks as the risk on sector. And if you're not seeing flow into IWM, basically small caps, those are your riskier, some of your riskier stocks and financials, you're probably not going to have a tailwind of the market. All right, and yes, it's ran significantly and it needed to cool off in base, but this is your risk on, risk off indicator, along with some tech stocks that I watch, like Tesla, Amazon, and Google, for a kind of a risk on, risk off. But this is your 1 week summary. Obviously, we've been flowing into defensives for the past week. So that's why your longs are not working. That's why you're getting stopped out. And that's why your techs and your growth are still not working. So we have to take a kind of forest for the trees overall view and step back and kind of see what's happening. You can go to your 1 month. You can kind of see what's happening, the same thing. XLC actually has a decent bounce. You can look at what the top weightings are on those. But then XLU and XLP for the past month basically has been leading and winning the race. So that's why for me, I was still pretty cautious about this bounce on the market, just because the money was flowing into the defensive sectors, which we have seen. Okay, with that said, I will go to basically my breakdown of my intraday charts, and I'll show you kind of what I was looking at today. Early in the morning, I posted this Q chart many times. Okay, 321 has been our supply. Now, let me give you an overview of what this is. This is a 15-minute chart. Okay, so basically what I'm looking for is I'm just looking for where price action has been. Okay, so we have our I call them pivot highs here. Okay, which this is where we've been. This is where we've been. Then we put in a pivot high here and a pivot high here. Okay, so for me, early in the morning, the Amazon, Google, and the other tech stocks were showing relative strength to the market. And I said 321 was our line in the sand, basically our brick wall. Okay, so you can use volume by price. Basically, all this is telling you is where the majority of the trading volume has happened. Okay, really ignore the price or ignore the colors, because they don't necessarily give you that much information unless it's just a larger bar like this. But again, just basically I was looking at where the price has been and where our pivot highs had been, and 321 on multiple time frames, including the daily, and then you can go to the comp daily if you want, and the 50 MA is about 321. So I start with the weekly and daily, and then I go down to smaller time frames, and you can see what's going on here. Price was just unable to take out the supply level. With as much as tech was trying to move, Amazon, Facebook was super strong, it could not get above this 321. And I was saying to myself, if it can't get above 321 and IWM and DIA Inspire weak, the market's not going to be in an uptrend today. It is just not going to happen. And we tried a second shot basically around 12 o'clock, and we failed. And we did come back and hold previous day close multiple times. But then I posted in the room right around here, I said, we're testing this lower range again. The more times you tap and test, the easier it is to break through this. And this is what happened. Okay. And you can see it was a lower high here, a lower high here, and then finally put in the lower low and broke down. So this is a possible short area if you want it on the Qs. The IWM was significantly more glaring to me. It opened weak. It could not even get above the first high of the 30-minute. We had this flag here. Hopefully everybody can understand this price action, okay? I use flags and boxes many times. We had this flag here midday, and I was saying to myself, I said, okay, if it could possibly mount a rally and break above this, then we have a chance, because this is a big previous level right here. Does everybody see how many times prices tested this here? Here, sorry, there. Multiple times price has been reacted in this area. So I was anticipating price to either hold here or get a major breakdown. The reason is, if buyers are at this level and they bought support before, and let's just say they rode this whole thing down, they're holding on for dear life here, basically like a cat with claws that's holding on to a ledge here. And whenever this dam finally breaks, the buyers finally will throw in the towel, and that's exactly what happened. We broke the low of the day, and then just continued lower. Okay, they threw in the towel. Everybody that had tried along and was underwater finally said, okay, these losses are greater than I want to hold for the rest of the day, and they threw in the towel. And basically, this is just psychology and sentiment of buyers and sellers. That's why I like to use supply and demand. I don't like to say support and resistance, because it is potential. Nobody knows exactly if we're going to bounce. Okay, this is all potential areas. So I had drawn this multiple times from over here, February 26th. Okay, and where did we basically stop at? When at the close today was basically a possible potential demand. If you want to use support, that's fine, but that's what happened today. Okay, that's exactly where we stopped. Does it hold tomorrow? I have no idea. One thing I do know is, if we open and are unable to mount a rally back up to this 321 area, the possibility of this low getting tested again, 207, becomes a greater probability. Okay, and I work on probabilities. Basically, that's all that's going to happen. As you can see, there's not much basically volume in here that's had traders stake claims. Okay, and basically when I say a stake a claim is basically they haven't put their money where their mouth is and decided to buy this area and hold on. Now, if this holds and we start to move back up this way, then that's a potential possible area where you could go long with your stop below here. But again, if we start getting down in this area, this is going to act like a magnet, because we have no supply here and no volume. Hopefully that makes sense. If it doesn't, please let me know and post in the room. The same thing with the SPY. It's kind of the same looking deal. All right, the 30-minute, we made a lower high. I said to myself earlier is, if the buyers have bought here and they're holding on, then as soon as we break these lows, they're going to throw in the towel, and that's exactly what happened today. They threw in the towel. Okay, so now we're coming into this demand area. Does it hold? I have no clue. Okay, what I do know is this 270 on the 30-minute basically equals the 21 MA on the daily. Okay, so I use multiple time frame analysis. Brian Shannon, a lot of other traders out there do that, and it just gives you an idea. Now, moving averages are not absolutes. They're just basically kind of an eye for me to know, to say, hey, this has been defended before. Could it be anticipated and possibly defended again? Absolutely. So if we get defended again, it's a possibility for me to go long here with a stop under this low. All right, basically simple risk reward, supply and demand. That's all I'm doing, and I'm just using price action. Okay, so again, we're making lower highs, but the other thing is we're in a range. Okay, so I can't get too bearish. Okay, this is the previous pivot highs. still pivot high, pivot high, pivot high here. Basically, if you want to use this whole area, but I can't get too bearish until we break this demand area and really start moving down to this level. Okay, so then what we do is we'll step up another time frame and we'll go to the 60-minute. Basically, all I'm doing is I'm just zooming out further and further. Okay, hopefully everybody understands that. This is how you get the overall picture forest for the trees for the market. So where's another potential area where I would look for price to bounce? It would be down here, basically around 384, 385 area if it decides to get down here. Okay, but you can look on the hourly and say, that candle closing actually didn't look so bad. The problem is this is not a 65-minute chart. So the 60-minute charts don't include um, the total last volume for the day. Okay, that's why I like to go to that 30-minute chart because there's, certain, we go from 9:30 to 4, so that last 60-minute can be a little wonky. So that's why I look. But again, we get below this, the possibility to come down here and test the lows comes into play. The DIA 60-minute kind of doing the same thing. We had this huge run up that broke immediately on this flag. I hope everybody can see that. I was posted in the room and I'm like, okay, this flag is breaking. We can't make a higher high. I anticipated that. And then this is a range here. And then we broke the range here. As you can see, just another box. That's all I'm doing. Building boxes, Lincoln Logs, Legos. As you can see, there's multiple boxes. And this is what I like to do. Okay, basically, I'm just saying, hey, this is a box. This is a box. This was a nice box here. All right, and basically all the box is price tightening, okay? I know Mark Minervini talks about this, basically volatility contraction. And all you're seeing is after a big run up and move, price decides to consolidate, all right? And that's what happens. Price moves up, it actually kind of pulled back here, but then it consolidated and then we got another move up, consolidated here, and then we finally got the breakdown. So this is a change in trend. When this starts happening, we start looking to the other side, okay? So now we've got a change in trend. Change in trend here, change in trend here, and now we're making lower lows and lower highs. Okay, now this is on a 60-minute time frame. If you went to the daily, it looks different. All right, we're still in a huge uptrend. All right, so nothing here on the Dow Jones is telling me, oh my gosh, I should get super bearish. All I'm saying is, if you're doing day trading or swing trading, you have to zoom in to smaller time frames. Okay, and you have to be able to look at how price action is working on a little bit smaller time frame. And then you can zoom out and look at the daily. Daily looks fine. We're still above the 21 EMA, but then we go in, to the 60-minute and we zoom in and we're like, okay, this is kind of what's happening. All right, so the 130 is the 21 EMA. So that's another area I'm going to be watching, and then I'm going to be watching this 319 to 321 if we get down here for anticipation for reaction for the Dow Jones. So hopefully those answers those questions right there. The next thing I do is I go to my tech watch list and I look to see how the techs are actually looking. Okay, so if you go to your mutual funds or any other ETF SPY or whatever, the highest weighted stocks in these mutual funds are these big, large cap tech names. Okay, it's just a matter of fact, the institutions have to own these names, and this is what moves the market. Apple, Amazon, Tesla, Google, Microsoft, all these names are what the institutions have to own. And you'll see if you go to any of the mutual fund weightings, large cap growth, they have to own all these names: Visa, MasterCard. It's just what they have to do. So if these are the highest weighted names, basically they're carrying the most amount of bricks and the most dirt to the construction site, then they have to be, basically in front leading and have a tailwind behind. If they don't, all your other, stocks are not going to be able to basically have a tailwind. Now, will they move? Will they go sideways? Will they basically tread water? Absolutely. But we need these stocks to basically be, our wind behind us and our wind behind the sails. And Amazon is basically one of the biggest ones. Tesla is another one, and we'll show you what Tesla. Basically, I've been using Tesla as my risk on, risk off. The other thing that was concerning to me was JPM was selling off pretty good. JPM, GS, these had huge runs, and I was cautioning people not to chase these huge rotations, okay? Because if you're not in down here and you're chasing this last breath move up, that last ditch move up, you're going to get hurt, and that's basically what happened here. This day right here, these 2 days right here should have been your day to take notice, okay? Because we didn't hold in the upper 50% of these candles, and it took out the lows there, and then we get the gap down, which confirms this change of trend. Okay, but again, a lot of these are still in the range on 30-minute and 60-minute time frames, so it definitely could bounce. I'm not getting too bearish and too crazy about that. Let's look at the last one, Tesla, which is basically my risk on, risk off. And again, we're just in this massive range. I haven't updated this chart lately. So for me to get super bearish on the market, not super bearish, but change my tune on the market, I would need to see Tesla break this low here. It tried to, and then buyers stepped in and held it in this range. But if it breaks below this tomorrow, then I don't think we're going to have the wind at our back. And basically, I'd be looking for a little bit larger pullback in the market. Hopefully that answered that question. Mikey, how do you know when is the right time to swing trade? Example, if you get one Amazon picture. Okay, so basically swing trading, you have to have a trend. Okay, there has to be a trend right now, and we're in a trendless market. The overall trend for the longer, let me go back. The overall trend for the longer market is up, but our intermediate trend is down. The other thing is the comp is below the 50 MA. Okay, I know people don't want to hang their hat on tech, but it's the largest group of stocks that are held in mutual funds. Okay, it's the largest group of stocks that individual investors hold. And if the comp is not doing good, then your overall wind at your sales is just, it's going to be more difficult. Okay, it's very simple. Look at this move here above the 50 and the 21. How good of environment was this? Basically, you could have blindly bought every pullback in the comp or in the overall market and won, okay? Or at least held your nose, even when you're underwater, and you would have been fine. Over here, it's a completely different, okay? You're under the 21, you're under the 50, and the market is going to be extreme as the volatility is going to increase when the comp is under the 50. All right, it's, IBD talks about this. It's called the power trend. The NASDAQ is above the 21, it's above the 200. They're all stacked. Everybody's partying. It's just much easier to trade. All right, hopefully that makes sense, but that's just the way it is. The Dow has been the same way. Okay, it's been above the 21, been above the 50. It's just been easier to trade, but now we're in a little bit choppier environment. So for me, I'm a growth to tech trader, so I focus on the comp. And when the comp is not giving us a wind at our sails, power trend 2150 and 200, I'm risk off. Okay, and I'm not looking to go long. We get back above the 21 and the 50, then I will be way more positive in the room about people buying pullbacks. And just holding overnight right now is basically just it's a coin flip. Okay, it's just a coin flip. I mean, we're range trading. I can't really stress that enough for everybody. We are range bound trading. All right, you can see this. See what happens. This is range bound. Yes, did we break the range, but we got back in the range. This is what we're in right now. I mean, this is basically untradeable unless you blindly buy here and immediately sell up here. Okay, sorry for the dog barking, but that's basically what you're doing. All right, and until this breaks out of the range, either low or high, Qs have to get over 322 and start moving back up this direction over the 21 EMA. Then it's just stuck, and that's just what you're going to see, and that's what's going to happen. Okay. Yeah, Grover's posted many verticals. I totally, if anybody has any questions about that, I encourage you to, he's just posted in the chat there to DM Grover about verticals, and they work extremely well. It's just something that I don't regularly do. I'm a common trader. That's what I do. I hold, but options in this environment, certain option strategies are extremely effective. And that's what he's posted there. But just doing directionals for swings, even a 30 to 45 minute or 30 to 45 day DTE, your theta is just going to burn you up because you're stuck in a range. Okay, and if you're doing an Amazon, hopefully you understand that, or everybody understands that. When you're stuck in a range, if you're buying just basically calls or puts and calls and puts, just trying to do a directional, you're just going to get smoked on the theta decay. Okay, because what's happening is it's just going sideways. The only person that wins in here is the rider of the option, the market maker. Yeah, the premium is so high. Exactly. And even even short-term DTEs, like let's just say you're doing weeklies on Friday, you're still gonna, the premium is so high and there's no direction. I mean, we're talking probably 5 to 7 minute scalps is basically what Grover is trying to do. Now he prefers basically to do, he prefers to do swings also because that's where your bulk of your money's made. If you can take 5 to 10 Amazon calls and hold them for, 3, 6, 10, 15 days, that's where your massive amount of money is made. But right now the environment is just not conducive for swing trading options. So hopefully that answers your question. And even short-term options, they're just getting, the premium's so high and the decay is so high, they're just getting smoked. And you can just see where we're going, sideways. Now I would prefer, so here's what I would look for. I'll go ahead and I'll cut this short. And if anybody has any other questions, but basically what I want to see is, let's just take Amazon, for example. Okay. And here's a range and here's our range here. So what I want to see is Amazon has to hold this range. What I would prefer this to do is I would prefer to see Amazon come up here and hold in the upper half of this range and then look to break out. Okay. As of now, we had this kind of, box flag breakdown, and now we're just going to test the top of the range. It has to hold this range right here for us to get any type of traction whatsoever. So the Qs are going to be the same deal. I want to see it hold in the upper half or the upper third of basically a 30 or 65-minute range. That's why I drew this box. If we could have held the day and flagged in the upper half, now I'll draw this in thirds. So basically here's 1/3 of the range. Okay, here's another third of the range. Okay, so you got 1/3, 2/3, 3/3. I want to see Qs hold in the upper third of the range. Okay, it has to hold up here. Price get tight. I would love to see volume drop off as price moves sideways and chops around and price gets tight. And then we build some momentum and juice. Right now, all we're seeing is people selling right into supply. Okay, I want to see people not sell into supply. All right, and when that changes, then I will get more optimistic about looking for swings and looking for trades for a trade up here. Okay, so then I would move to say, okay, we've got a chance to hold a option maybe longer than 5 to 7 minutes. Maybe you could look for a day, or even your comments look for a day, but we're not seeing that yet. Okay, I thought we had it here. And it didn't happen. They just kept selling into supply. I hope everybody sees that and hope that makes sense. We're just selling into supply at the moment. Now, when that changes, we'll see it. Okay, you'll see price flag, you'll see price tighten up and get extremely tight, and you'll see volume drop off. Then that means the sellers are not ready to sell into supply. They're going to hold here, and that's what you'll see. But until that happens, I'm not looking for swings. Hopefully that makes sense. And SPY is the same thing. I want to see it hold in the upper half of the range, and you can see what's happening. It's not holding the upper half, upper third of the range. Basically, it's just, as soon as it hits it, people are just dumping. They're just hitting the eject button. Okay. It tried here, it tried here, it tried here, couldn't hold. And then now what happens is you get a lower high because people that bought this are selling even sooner. Okay. Hope that makes sense. People selling even sooner. So what I want to see is, I want to see this bounce and people not sell. I want to see people tighten up their belt straps and put on their helmet and stick in there and say, okay, I'm going to hold with price, and I'm going to hold above 392 into 394, and I'm going to stay with the trade, and then possibly we get a gap up. But at the moment, that is not occurring. So hopefully that makes sense to everybody. No paper hands, only diamonds. Yeah. I mean, that's a great statement, Grover. Basically, you want to see the buyers hold their positions, and they're not. Basically, as soon as it hits a level, they're just, throwing it out there like grenades and just, tossing them away, kind of, over the edge, and that's what's happening. So, unfortunately, that's what's happening at the moment. Yeah, we got to see people hold in this upper half, and people be confident to hold. And the same thing kind of goes with the 60-minute, but the same thing kind of goes with the daily on Qs or on SPY. We want to see people hold this level, and we could. I mean, we could walk in tomorrow, and we could hold. The IWM was concerning to me today, though. Okay, it was just concerning because that's been leading. That's kind of where the risk on, risk off trade is. But you can see even on the daily here, on the Qs, I mean, this is just, it's very well defined here. I hope all the traders can see this. You know, these, just look for the tops. Okay, this is very well defined. And if we get above this, then it'll be party on into the end of the year. But we have to get above this. Okay, we have to overtake the 50 MA, and we have to overtake this supply level. You know, just keep it simple. Above here, then look for longs. Below here, you're just going to be short term, day trading, and basically taking the wins we can get them. I'm keeping it simple. All right, and that's simple for me. Above here, it's a go. Below here, we're foot on the brake, and just taking, what it gives me. But again, here, above here, yeah, I agree. Above here, I will look to do more core positions in tech. Hopefully that makes sense. This is exactly what I'm saying. I'm laying it out above 323, 324, and holding. I will look to take more core positions in tech. Tesla, Amazon, Google. I will start to build some core positions in the portfolio. Now, I still have core positions from way lower, but I'm saying I will start to add to those positions, and I'll feel a little more comfortable holding these, and then basically move to the possible ability of a breakout. The other thing I do want to say is we're building bases. Okay, this is what happens. This will be the last thing I talk about. We're building bases. We're building bases. Okay, we're building a base here, and what you can see is happening is we're starting to build the right side of a cup. Okay, and this is what's going to happen. Now, it's not a really well-defined cup, but this is what we're doing. So I want to see this continue to chop and build the right side of this cup. And then we'll actually have maybe a decent base. We'll get some pattern recognition. That's what happened. Over here, we had a double base. Now, this is another pattern that I like. You see these cups, and then you get higher lows, and then you look for breakouts. So that may be what happens here, okay? We might get a cup up here, then we might get another pull. So what I would like to see is price get above here, and then build a nice little cup here, and then we look for price to break out of this level here. Hopefully that makes sense. Okay, and that would be the optimum scenario for tech and Qs. And the same thing happened over here. All right, cup, cup, and then we hold in the upper half of the range. Everybody see this? We hold in the upper half, tightened up, volume drops off. Okay, everybody see that? Volume drops off. Here, see how the volume contracted? Very nice drop off in volume, even another nice drop off in volume, and then we were off to the races. Okay, so this is the ideal scenario that we need to look for Qs to look to move higher. Okay, hopefully that makes sense. Hopefully that answers questions. Okay, again, yep. I'll flash back to IWM. This is my line chart. I use this for my long-term accounts. Basically, if it's above the 21, I'm all longs. If it's below the 21, I start to look to take a few profits off IWM. If it's below the 50, I'll look to take a little more off of IWM. But I want to see this regain the 50 MA. If this does not regain the 50 MA, then that's kind of concerning for me. The other thing that is concerning is this was on higher volume today. And you can see we moved up on lower volume, which was a little bit concerning for me. It was kind of a yellow flag, but I don't argue with price. But today was on higher volume and breaking below the 50 MA. So I would say for me, this area right here would have to hold, and the next area would be down here at 204, 205, 206, 207. Okay, traders. All right, I hope that helps everybody. I'm going to go ahead and stop the recording. This will be recorded. I'll post it in the room. Hope the price action explanations helped. If anybody has any questions, DM me privately, or if you want me to help you look at anything, I'll certainly do that. I may be busy the rest of the week, but hopefully that helps. Okay, everybody have a great afternoon, and we will